Gold and silver are pumping right now. Silver just blasted through $94 an ounce. Gold just crossed $52.50, both of them ripping at the same time. If you have been watching this channel, you called this with me. The data was there. The setup was screaming. And today, the market confirmed everything. But before I break down the three massive catalysts that hit today, look at this. This morning at Bullion Star, one of the largest physical precious metals dealers in the world, there were massive queues outside the store. Real people, standing in line, waiting to buy physical gold and physical silver, not clicking buttons on Robinhood, not buying paper ETFs, standing in a physical line to hold metal in their hands. I'm showing you the footage right now. Look at this line. When people are queuing up to buy silver at $94 an ounce, that tells you more than any chart ever could. This is fear. This is real demand. Something has fundamentally shifted. And after what I am about to show you, you will understand exactly why these people are standing in that line. Now here is a number that stopped me cold this morning. Pull up the monthly chart on silver. February 2026 is the 10th consecutive green monthly candle. 10 months in a row. 10 straight months where silver closed higher than where it opened. I want you to really think about that. In silver's entire modern trading history, you almost never see 10 consecutive green months. This does not happen in a metal that is about to crash. This does not happen in a pump and dump. This happens when something structural has changed in the market and big money is accumulating relentlessly, month after month. 10 green candles. Every single month, the dips got bought. Every single month, the doubters said the top was in. Every single month, they were wrong. And I am going to show you today why month 11 and 12 are going to be most crucial. Because what happens today changes the entire trajectory. Welcome to The Hidden Economy. If you're new here, this is where I break down the data that Wall Street does not want on your radar. Hit subscribe right now so you do not miss what is coming next. And if this video is already making sense to you, do me one favor. Hit that hype button right underneath this video. It takes 1 second. It costs you nothing. But it tells the algorithm to push this video to more people who need to see it. Help me get it out there. Hit hype. Let us go. Now, let me show you three catalysts hit within hours of each other today. Any one of them alone moves metals. All three together created an explosion. Let me break each one down so you understand not just what happened, but why it matters for where prices go from here. Catalyst number one, Iran nuclear talks just collapsed. The US and Iran finished their third round of indirect negotiations, and it ended in complete deadlock. Iranian Foreign Minister Sayed Abbas Araghchi called it the most intense round yet. No deal on dismantling facilities. No deal on shipping out enriched uranium. Nothing. Now let me make this simple because this is critically important. Iran has been enriching uranium for years. The world suspects they are moving toward a nuclear weapon. These talks were the diplomatic solution. The peaceful off-ramp where Iran agrees to limit its program in exchange for sanctions relief. The two sides were not even in the same room. They have been negotiating through intermediaries, going back and forth. This third round was supposed to be the breakthrough. It was not. That off-ramp just disappeared. When diplomacy fails, think about what options remain. Either Iran keeps enriching and the threat grows every single day, or someone, most likely Israel with potential US backing, takes military action to stop it. There is no peaceful middle ground left. Both paths lead to escalation. And the market understood this immediately. Gold crossed $52.50 within minutes of the news. Silver started ripping. Because when the last diplomatic option dies, money flows into the assets that have protected wealth during every conflict in human history. Gold and silver. But here's the part that should genuinely concern you. Because the Iran story did not happen alone today. It happened alongside something far more urgent. Catalyst number two. And this is the one that made me stop everything I was doing. The United States is evacuating non-emergency personnel and their families from Israel right now, today, February 27th, 2026. The State Department authorized the departure. And then U.S. Ambassador Mike Huckabee did something that elevates this to a completely different level of seriousness. He personally sent an email to embassy staff saying anyone who wishes to leave must do so today. The New York Times confirmed this. I need you to understand the weight of that language. Governments communicate in layers. A travel advisory is layer 1. That is just, hey, be careful out there. Authorized departure is layer 2. That means you can leave if you want. What happened today is beyond both of those. The ambassador personally telling staff to get out today is layer 3. And then the State Department added 7 words that tell the entire story. While commercial flights are available, read that again, while commercial flights are available, the U.S. government is openly acknowledging that there may come a moment, possibly very soon, when you cannot fly out of Israel. When does that happen? When airspace shuts down. When does airspace shut down? When bombs are falling. And then the reports of bomb shelters opening across Israel. Bomb shelters, embassy evacuation. Ambassador saying leave now. failed Iran nuclear talks, all on the same day. I'm not trying to scare anyone. I do not do that on this channel, but I am connecting dots that the market is already connecting. And the market's conclusion is clear. Gold 52.50, silver 94, 6% move in a day. The metals market is screaming that something big is coming. Now here's what most people are missing, and this is where my analysis gets critical. Think about the Strait of Hormuz, that narrow waterway between Iran and the Arabian Peninsula. Roughly 20% of the world's oil supply passes through it every single day. If Iran is involved in a military conflict, that choke point is immediately at risk. Oil does not need to stop flowing. Just the threat of disruption sends oil prices through the roof. And when oil spikes, every price in the economy follows. Your gas, your groceries, your electricity, everything. That feeds directly into inflation. And that brings me to catalyst number 3, which is going to tie this entire picture together. Catalyst number 3. The PPI numbers came in this morning, and they were a disaster. Here's what you need to know. PPI measures inflation at the business level. It is what companies pay for raw materials, for shipping, for everything they need to make the products you buy. Think of it as a preview of where your grocery bill is headed. When businesses pay more, they pass it to you. That is how inflation works. PPI tells you what is coming before it hits your wallet. January PPI came in at 2.9%. Wall Street expected 2.6%, bad enough. But core PPI, which strips out food and energy to show the real underlying trend, came in at 3.6%. They expected 3.0%. Let me put that miss in perspective. 0.6% above expectations on core PPI is massive. That is not a rounding error. That is the kind of miss that makes the Federal Reserve sweat, because their target is 2%. Core PPI just came in at 3.6%. That is almost double where they want it. And the timing is devastating. Think about what is happening simultaneously. Oil could spike because of the Middle East. If Iran is involved in a conflict, the Strait of Hormuz is at risk. 20% of global oil flows through that choke point. Oil spikes mean gas prices spike. Gas prices spiking means shipping costs spike. Shipping costs spiking means the price of everything you buy goes up. So you already have PPI running hot, and now you have a geopolitical situation that could pour gasoline on the inflation fire. The Fed is looking at this, and they know they are trapped. They cannot cut rates because inflation is reaccelerating. If they cut now, the dollar crashes and prices go even higher. But they also cannot raise rates because the economy is already cracking. Housing is frozen. Nobody can afford a mortgage. Consumer debt is at all-time records. Credit card delinquencies are rising. Small businesses are suffocating under borrowing costs. Raise rates further, and you risk a full recession. So the Fed does nothing, paralyzed, stuck between inflation they cannot control and an economy they cannot afford to break. And while they sit there doing nothing, your dollars keep losing purchasing power. Every single month. Your savings buy less. Your paycheck covers less. That is the silent tax nobody votes for, but everybody pays. And this is exactly why people were standing in line at Bullion Star this morning. Because gold and silver are the exit from that trap. You cannot print more gold. You cannot create more silver. There's a fixed supply on this planet. When the dollar loses value, metals gain value. That is not a theory. Gold has gone from under 2,000 to over 5,200 in 2 years. Silver has gone from the low 20s to 94. They are not going up because of hype. They are going up because the dollar is going down. And today's PPI data just told you the process is speeding up. So let me recap where we are. In the last 60 minutes, you just learned that Iran nuclear talks collapsed, that the US is evacuating Israel and bomb shelters are opening, that inflation just came in massively above expectations. 3 catalysts, 1 day. And silver responded by exploding to 94. But here's the thing. Today did not happen in a vacuum. What happened today is the latest escalation in a story I have been tracking for months. And if you have not been following along, let me get you caught up fast because the context makes today 10 times more significant. The physical silver market has been flashing warning signs all year. China has been paying over $100 an ounce on the Shanghai Futures Exchange, while the rest of the world was paying 80-something. That 14% premium is not normal. That is desperation. That is the second largest economy on Earth saying, we cannot get enough silver through normal channels and we will pay whatever it takes. And it is not just buying. China reclassified silver as a strategic material in January, same category as rare earths. They cut export licenses down to just 44 companies. The second largest silver producing country on Earth is telling its own mines that this metal stays in China. That is a hoarding posture. That is a country preparing for conflict. Meanwhile, COMEX, the main exchange in New York where banks store physical silver, has been hemorrhaging metal. The registered silver available for delivery has been falling month after month. Somebody is taking delivery and moving that metal into private vaults, where it will never come back to the market. When vaults drain like this before a supply crunch, it is like watching a lake dry up before a drought. The water is leaving and it is not being replaced. And then there is Mexico, the #1 silver-producing country on Earth. 202 million ounces a year, 25% of global supply from a single country. And that country is in the middle of a civil war. The biggest producing states, Zacatecas, Durango, Chihuahua, are war zones. Cartel violence is shutting down roads. Workers cannot safely reach mines. International mining companies are pulling staff out. A quarter of the world's silver supply is under direct threat. Not in theory. Right now, today, every single one of those stories was already bullish on its own. Now stacked today on top. Iran, Israel, inflation, layer after layer of catalysts building on a market that was already in a 67 million ounce annual deficit. That means last year the world consumed 67 million more ounces of silver than every mine on Earth produced. That gap had to be filled by pulling metal from vaults and stockpiles. And those stockpiles are running low. Now you're adding geopolitical fear, inflation acceleration, and the real possibility of Middle East conflict sending oil prices through the roof. This is not a single catalyst story. This is an avalanche. And I want to explain something for newer viewers because it is critical for understanding why silver moves so much harder than gold. Silver's total market is tiny compared to gold. All the above ground silver in the world is worth maybe $150 to $200 billion. Gold is worth trillions. That size difference is everything. When $1 billion of fear money flows into gold, the price barely moves. When $1 billion flows into silver, it sends the price vertical. Silver is like a small boat in a storm. It gets thrown around violently. And today, the storm got a lot bigger. That is why gold moved 1% and silver moved 6%. Same storm, different sized boats. Let me talk about 92 because I specifically called this level in my last video. Silver kept hitting 92 and getting rejected, slamming into it, pulling back, coming right back. I told you it was going to break. Today, it did not just break. It blew through 92 like it was not even there, straight to 94. And here is what matters about that technically. When a resistance level breaks on huge volume with a fundamental catalyst behind it, that former resistance becomes support. 92 is now the floor, not the ceiling. Combined with 10 consecutive green monthly candles, the chart is telling you the same thing the fundamentals are telling you. This bull market is not done. It is accelerating. Now I know some of you are thinking it. Is this the top? Am I buying high? Is silver about to crash like it did in 2011? Let me address that head on because it is a fair question. In 2011, silver ran to $50 on pure speculation. Momentum traders piling in. The physical market was not tight. There was plenty of metal available. When the music stopped, there was no fundamental demand to catch the fall. Price collapsed. Today is a completely different animal. The physical market is in a verified deficit of 67 million ounces. Comex vaults are draining to levels that make veteran traders nervous. China, the second largest producer, is hoarding and restricting exports. Mexico, the largest producer, has mining operations under threat from a civil war. People are standing in lines to buy physical metal at $94. And now, on top of all that, you have a Middle East crisis and inflation reaccelerating. In 2011, silver had momentum, but no fundamentals. In 2026, silver has both. That is the difference. And that difference is why I do not think this ends with a crash. I think this ends with prices that today would sound crazy, just like gold at 5,000 sounded crazy 2 years ago. And here it is at 52.50. And speaking of gold, let me explain why gold at 52.50 matters so much for where silver goes next. Gold has more than doubled in 2 years, from under 2,000 to over 52.50. That kind of move in the most liquid commodity on Earth does not happen because of one headline. It happens because the entire global financial system is shifting. Central banks are buying at record pace. Countries are moving away from the dollar. Trust in paper currencies is eroding worldwide. That shift is structural, it is generational, and it does not reverse. Silver follows gold, but with a multiplier because silver's market is so much smaller. The gold to silver ratio right now is around 55 to 1. That means it takes 55 ounces of silver to buy 1 ounce of gold. In previous major bull markets, that ratio compressed to 30 to 1. Some cycles, it went to 20 to 1. If gold stays at 52.50 and the ratio hits 30 to 1, that puts silver at 175. At 20 to 1, silver goes above 260. The ratio is already compressing. Silver outperformed gold by 6 to 1 today. That repricing is underway, and it has a long way to go. On top of that, silver has something gold does not. Massive industrial demand growing every single year. Every solar panel on Earth contains silver. Every smartphone, every electric vehicle, every military guidance system, The energy transition and the technology revolution are consuming more silver annually, and the mines simply cannot keep up. So you have investment demand surging on one side because of fear and inflation, and industrial demand surging on the other side because of technology, both pulling on a supply that is already in deficit. That is the setup. Now let me put this entire year in perspective. Silver started 2026 around $68. It is now at 94. That is a 38% gain in less than 2 months. Every single catalyst that drove that move is still active and getting stronger. China hoarding, Mexico in crisis, comex draining, inflation reaccelerating, Middle East on fire. The catalysts are not fading, they are multiplying. So let me tell you what I think happens from here, because I know that is what you came for. And I want to give you honest scenarios, not hype. Scenario 1, conservative. The Middle East de-escalates. Iran comes back to the table. The Israel situation calms. In this case, silver still does not crash because the physical deficit has not been fixed. China is still hoarding. Mexico is still in crisis. Comex is still draining. The geopolitical premium comes out, but the structural premium stays. In this scenario, silver holds above 90 and grinds toward 100 over the next few weeks. Even the conservative case gives you a new all-time high. Think about that. The best case scenario for bears is silver at 100. Scenario 2, base case. The Middle East stays tense but does not explode into full conflict. Iran continues enriching. Israel stays on high alert. Inflation stays sticky. The Fed stays trapped. In this case, silver breaks 100 within weeks. The combination of physical tightness, ongoing Chinese demand, and persistent inflation keeps pushing prices higher. I think 110 to 120 is realistic by mid-year in this scenario. That is where the fundamental supply and demand math takes you when the deficit is 67 million ounces and growing. Scenario 3, full escalation. This is the one that keeps me up at night. Military action in the Middle East. Oil spikes above 150. Inflation goes haywire. Simultaneously, comex faces a delivery failure because the vaults have been draining for months and suddenly everyone wants their physical silver at the same time. In this scenario, you're not looking at incremental moves. You're looking at a repricing event. Silver does not just go to 150. It goes to wherever the available physical supply says it should be. And right now, there's not enough physical silver above ground to meet current demand at any price below dramatically higher levels. 400? 500. Numbers that sound insane today, but would make perfect mathematical sense in a delivery crisis. I'm not predicting scenario 3, but I am telling you the conditions for it are more realistic today than they were yesterday. Every single catalyst is building, not fading. And the market is pricing that in tick by tick. JPMorgan put out a note today saying, expect volatility. And they are right. Silver moving 6% in a day means you're going to get wild swings in both directions. There will be red days. There will be days where silver drops $3 or $4 and everyone on social media screams that the top is in. I have seen it happen 100 times during this rally. Someone buys at 85. Silver dips to 82. They panic sell. And a week later it is at 90. Do not be that person. Volatility is the price of admission in a bull market this powerful. What matters is the trend, and the trend is 10 green months. Every dip bought. Every resistance level broken. That is not noise. That is signal. JPMorgan also flagged the surge in paper market positions. Here's why that matters, and I want to make sure everyone understands this. Most silver trading does not involve actual metal. It happens through futures contracts on COMEX. Paper promises. When traders pile into long positions, they push the price up. But eventually those contracts expire and the holder either takes cash or demands physical delivery of real silver. In a normal market with healthy vault levels, delivery is smooth. Nobody worries about it. But COMEX is not normal right now. The vaults have been draining. The registered silver available for delivery is at concerning levels. If a wave of contract holders demands delivery at the same time and the metal is not there, you get what is called a delivery failure. That would be a seismic event for the entire commodities world. It has not happened yet, but every month that passes with vaults draining and open interest rising brings it closer. And a geopolitical crisis that triggers a rush into metals is exactly the kind of event that could push the system past its breaking point. There's another signal from the physical market I want to highlight. The Qs at Bullion Star this morning are not an isolated event. Reports from dealers around the world show physical premiums rising. When you buy a silver bar or coin right now, you pay significantly more than the spot price on your screen. That gap between the paper price and the real price you pay for metal in your hand is growing. In every previous precious metals bull market, when physical premiums expanded like this, it was a signal that the real squeeze was just beginning. The paper market says one price. The physical market says another. And when those two diverge, the physical market always wins in the end. Always. Because at the end of the day, You cannot build a solar panel with a futures contract. You need real metal, and real metal is getting harder to find. I want to talk directly to those of you who have been holding silver since the 30s or 40s or 50s. You're sitting on generational gains right now. I know the temptation to sell is real. Nobody went broke taking profits. That is true. But before you sell, answer 5 questions. Honestly, is the deficit fixed? Is China done buying? Is Mexico producing more? Is inflation under control? Is the Middle East at peace? If every single answer is no, then every single reason you bought in the first place is not just intact, it is stronger. Selling into that setup is a decision you need to be very sure about. Because if you sell silver at 94 and it goes to 150 or 200, which is entirely possible, given the supply deficit math, that is a decision you will think about for a very long time. And I want to address the people who are going to call this fear-mongering in the comments. I hear it every video, and I get it. Big claims make people skeptical. They should. But everything I just told you is verifiable. Iran talks. Failed. Check the news. Israel is evacuating. Check the State Department website. PPI came in hot. Check the Bureau of Labor Statistics. China is paying 100 plus on Shanghai. Check the SHFE data. Mexico is in crisis. Check any news outlet covering Latin America. Comex is draining. Check the CME Group reports. I'm not making any of this up. I am taking publicly available data and connecting the dots that most people are not connecting because they look at each story in isolation instead of seeing the full picture. When you see the full picture, it becomes very clear why silver is at 94 and why I believe it is going much higher. For those watching from the sidelines, I respect that. I never tell anyone what to do with their money, but I will tell you what I am seeing. I am seeing the smart money accumulated for months. I am seeing institutions positioned. And now I am seeing retail show up. Those lines at Bullion Star are the beginning of a wave. When regular people start converting dollars to metal, when the narrative breaks through from financial Twitter into kitchen table conversations, that is when the acceleration phase begins. And today might be the day it started. Silver at 94 with Iran talks collapsing, Israel evacuating, inflation reaccelerating, China hoarding, Mexico in crisis, COMEX draining, and 10 consecutive green months on the chart. I have been covering markets for a long time. I have never seen this many bullish catalysts aligned at the same time on any single asset. Ever. That is not hype. That is observation. And my conclusion from that observation is simple. I am deeply bullish on silver and I am deeply bullish on gold. Both of them. And I believe the biggest moves are still ahead of us. If you missed my last video breaking down the China $3 trillion silver war and the Mexico supply crisis, go watch it now. Link in the description. That video is the strategic foundation. This video is the real-time confirmation. Together, they give you the complete picture. Drop a comment. Tell me where you think silver is headed. 100 by next week? Higher? I want to hear your call. I will pin the best ones. And share this video right now with anyone who cares about their money. Because what happened today in gold and silver is not a drill. This is real. And the people who understand what is happening right now are going to look back on this moment as the time when everything became clear.